Hey there, everyone. Dave Keller here with Market Misbehavior. This is your Chart This with Dave Keller episode for Thursday, August 6th. Thanks for hanging with me. We are here in San Diego, actually in Oceanside, getting ready for a big soccer tournament over the weekend. Thanks for being flexible as I figure out all the travel and the logistics, but had some time before we go out to enjoy some local tacos, which I'm told is the delicacy to enjoy in this part of the country. So we were going to go check it out for dinner. But before then, wanted to debrief briefly on some of the charts that I've reviewed. So it'll probably be a shorter show than usual, but I hope that this helps you make sense of what's going on in the markets here, because of course we've got quite a lot going on here. Just going quickly to the market recap. And again, we're not doing this live, and I apologize for that, but you are able to ask questions at any point using the comments section on our YouTube channel. So please keep the questions coming. It'd be great to hear from you as always. So we talked about how this week so far, after Monday and Tuesday's, incredible move to the upside, Wednesday and Thursday has been more about consolidation. Today we have the S&P closing almost below 7,700. I think it's worth noting that we had a couple bounces around that level through the course of the trading day today. Mid-morning through lunchtime was kind of the weakest move. The rest of the day was really more sideways, bouncing between 7,700 and essentially getting back up to Wednesday's closing price. But by the close, the S&P down slightly, 0.2%. The NASDAQ down slightly, a rounding error below zero. The Dow was the biggest area of deterioration. Part of that's because sectors like materials and industrials, which are a little more value-oriented sectors, a little heavier weight in the Dow, felt some pain today and underperformed the major averages. We'll get to more sector themes here in a minute, but I did want to point out, by the way, small caps really actually underperforming here quite a bit here. If you look at the relative performance of the Russell 2000 versus the S&P 500, we've been focusing on how the long-term theme there, certainly in 2026, has been small over large. But for the last couple of weeks, that story has been flipped pretty consistently. So small caps actually underperforming their large cap counterparts pretty consistently here going into August. Volatility remains at extreme low levels. The VIX almost broke below 15 today, and that's a pretty low range. Now, to get ahead of a question I often get, why can't the VIX go down lower? Right? Why doesn't the VIX get down to like 13 or 12 or 10 or even 8? Here's the thing, what you have to remember is there's a natural volatility to any sort of financial market, right? Assuming they're liquid enough, assuming there are enough participants, there's sort of that natural fluctuation as buyers and sellers are matched up. Even if, generally we are in agreement about where stocks generally should be, there's still sort of that natural kind of noise between all the buys and sells and between all the individual orders being matched up. And so there's never just zero volatility, right? There's always some volatility. So that's why we talk about high versus low volatility. A low volatility environment, for me, anything below 20 and certainly anything below 16 is an extremely low volatility environment. Is that bullish or is that bearish because of the VIX being so low? Does that mean there's only one way to go up? Not necessarily. And if you look, the VIX can actually get down below 16 and stay there for quite some time, at times months on end of remaining fairly low. So what we need to wait for is not, just assuming because it's low that volatility is going to spike and that stocks are going to rotate lower. We just need to patiently wait for volatility to increase. And for now, not happening today, volatility continuing to push lower. Tell you what is not pushing lower, their rates. We talked about the 10-year treasury yield, and I grabbed that chart to reflect on with you in a minute. 10-year yields have been generally trending higher. Now, we've had a bit of chop around here in the last week, driven in no small part from some of the latest economic data, certainly events in the Middle East, and re-escalation, or really a quieting of the conflict there in recent days has caused rates to kind of come down a bit, kind of pushing back higher today as crude oil prices popped higher as well. Dollar index pushing a little bit higher as well, which is something to keep an eye on. In the commodity space, gold, kind of a flat day after breaking above key trendline resistance. As I mentioned earlier in the week, I added to a position in the IAU because of the break of gold above key trendline resistance that we've been tracking for going on 6 months now. A bit of a pause there. Silver down slightly, not too much, but the real movement in the commodity space in the energy area, right? Crude oil up almost 4%, Brent crude up almost 5%, gasoline futures were higher. So the energy space really accelerating, and the energy sector ended up being the top performing sector. We have now finished the 24-hour period for Bitcoin, sort of traded lower through the course of the equity session. Bitcoin currently around 64,270 as we're recording the show here. Most of the top 10 coins actually in the red here as we go live. And that's just, basically the new day is just getting started for that 24-hour period. All right, continuing on, looking at the 11 S&P sectors, we can see today energy, really the class of the markets today, up 1.5%. Crude oil prices popping higher. That's going to cause energy prices to go up. I still have that double long energy fund that I'm holding. And days like today make that feel like a good idea. I'm just expecting volatility and and basically making a bet that the conflict in the Middle East is not resolved yet. I just feel fairly confident that that's a decent bet to make. And I could be wrong, but keeping it on for now. Communication services and healthcare, not up by much, but just up a little bit. On the downside, industrials, real estate, materials, all down slightly less than 1%. We'll call it 0.9%. So was there a theme to the sectors? The general theme was that most things are down. The other thing I would say, energy really stands alone with a strong day. Everything else was sort of slightly higher to slightly lower. So sort of a quiet, again, continuing this digestion phase that we saw after Monday and Tuesday's rally to the upside. And I think you're seeing that at the stock level too, because we'll look at some of the individual names showing some distribution patterns, some bearish candle reversals on Wednesday's session that played out pretty well here today on Thursday. Looking at the breadth conditions, we can see not a great breadth day, particularly when you get to the mid caps and small caps, which definitely underperformed today. On the New York Stock Exchange, which is the broadest universe we look at, about 60% down to 38% up. Look at mid caps, even worse though, 69% of the small cap index was down today. And we can see that on the market factors as well, right? Look at all the small cap boxes within the Morningstar style boxes, all in the red. Large cap growth and mid cap growth basically flat for the day. So those were the best places to be. But note that pretty much nothing was having a great day today. The only things that were looking good in the Dave's Dirty Dozen, SpaceX, getting another bullish engulfing pattern. That's two bullish engulfing patterns in the last week and a half. So that's something to note. Maybe we are putting in a floor and identifying that and confirming that with some bullish candle reversal patterns. Microsoft also following through after a gap higher post earnings, up 2.5% today. On the downside, what was not doing well? Semiconductors like Micron down 1.3%. Alphabet continuing to pull back after that bearish candle pattern that we highlighted. Tesla pulling back as well. All right, we're going to continue on looking at the heat map in a moment. But before we do that, I do want to just mention one thing. A friend and mentor, Larry Williams, wrote earlier this week to let us know that Trader Victor Niederhofer, just passed away this week. I did not know, Victor Niederhofer, never met him in person, but certainly read his book, The Education of a Speculator, back in the day, and enjoyed that read. He strikes me as one of those trader educators, very much like a Larry Williams, successful trader, and puts his money where his mouth is, actually, walks the talk and has success, but then uses that success to educate and empower another, and if not multiple generations of traders. And Trader Vic was known for that. A number of people that I've talked to that knew Victor directly were, pretty broken up on the news. Again, I wish I had met him, at some point in my career, just never had the opportunity. But I do think it's important to recognize those that come before us that, do so much to help people like me and people like you to just make better decisions and trade better. Let's hope we apply some of Trader Vic's lessons today and always. Rest in peace, Victor. And thanks so much for supporting so many of us as we learn about trading. All right, looking at the heat map, not a great day, right? And we can see that, the breadth was sort of slightly negative. So, there have been days when it feels like there are some key themes. I don't think there's a lot of big themes today. Besides, it was very much a stock picking kind of environment. So, having said that, let's focus on where we did see some extreme moves. And I think that's one of the benefits when you have a kind of a flat day, the things that were up a lot and the things that were down a lot start to stand out. And I think that's where we want to focus our time and attention. So let's start, as always, in the technology sector. Have to highlight Microsoft, obviously standing in many ways on its own in the mega cap growth space, having a pretty decent day today. Microsoft had a good earnings report, continuing to push higher, and I think that's pretty important to recognize. Number of the software names got absolutely clobbered. AppLovin, which is a name that looked really interesting on June 1st when I'm doing a stock picking competition with Tom Boley and friends, and I top ticked that thing just brilliantly. That thing has round tripped all the way back down to make a new 52-week low today. So that's obviously not working. Salesforce pulling back, a lot of software names coming down. Datadog, another one coming down today. And then elsewhere, SanDisk and others. And I would say the chart of SanDisk is one maybe to reflect on, because what's happening in the chart of SanDisk, I'll just bring that up real quick. I mean, this shows you the challenge you have with some of the semiconductor stocks. Micron does not look too dissimilar to this. So, I mean, look at how much this changed from coming off of the lows and March and April, moving higher May, June, July. April, May, June, I should say, made a peak in mid June, July, and now into early August. Just classic downtrend phase, right? So what changed here? Well, we went from making higher highs to making lower highs. We went from higher lows to lower lows. Just look at the price relative to the 21-day EMA, right? Uptrend phase, higher lows, pulling back to an ascending 21-day. That changes. Now we have a downtrend making new swing lows. Counter trend rallies stall out at a descending 21-day EMA. So on a chart like this, what am I looking for? I'm looking for this to look more like this, right? I'm looking for a break back above the 21-day. Given what's happened here, I think a break above the 50-day would be pretty good. So for me, like 1700, that's kind of the alert I would set. And SanDisk over 1700 probably becomes a pretty interesting chart. But until I see that, certainly until we regain the 21-day EMA, not a lot to get excited about on that particular chart. So that's some of the themes in the technology sector. Just rapid fire running around here in the interest of time. I would say in the financial sector, I'm noting names like Berkshire, like MasterCard, like others, just not having huge updates, but just kind of grinding higher. And that reminds me of the types of charts that often surface in a low volatility environment. With the VIX around 15, we don't have a broad expectation of big moves necessarily, but the financial sector, a lot of those names kind of slowly grinding higher. That's something to look for. In the consumer discretionary sector, I would say home builders getting dinged pretty good. Rates popping back up a little bit here. That's generally not good for home builders. So a number of the home builders here in the consumer discretionary sector in the red. Back on the upside, the old school telecoms, looking at AT&T, mobile names like T-Mobile. Not great charts yet, but starting to bounce off of an outperform on a sort of flat day. Disney continuing to move higher post earnings, and I did grab that chart to highlight with you. A couple of random names in the healthcare sector looking pretty good. Of course, the energy sector is top of mind with crude oil prices popping back to the upside. So on a day like this, again, this is a day to focus on scans, to focus on screening. I would argue when the benchmarks are flat, we look for opportunities outside the benchmarks. I'm finding them. One of the scans I often run is stocks making new 3-month highs. I ran that scan earlier today, and I'll share with you a couple of the names that came up on that scan here in a moment. Before we get any further, I do want to give a quick shout out to one of our partners, Seeking Alpha. They have a brand new product called the Quant Growth and Income product. You can get 10% off if you go to marketmisbehavior.com/growth income. I interviewed Steve Chris, runs the quantitative effort at Seeking Alpha. I interviewed him maybe 3-4 weeks ago on the podcast. Had a great discussion. We talked a little bit about the new growth and income product, but now I've had really had a chance to dig into it. It looks for that combination, that sweet combination of good growth characteristics, but also a decent income component. And that's a subset of the growth universe that has both of those qualities. And they highlight a couple names a month, dig into them and share them. And that's what you get access to with this new platform. Again, go to marketmisbehavior.com/growth income or just scan the QR code that you see on your screen. And thanks again to my friends at Seeking Alpha supporting Market Misbehavior. All right. Hey, listen, I hope the audio is okay. I hope you're able to see my charts okay. I am using a completely different setup than normal, but I am asking you to just go along this journey with me as I travel around Southern California with my family. Grab some time to look at charts, which I'm happy to do, and I appreciate you being flexible and patient if things are not as awesome as they are from the studio. Having said that, the S&P 500 is still good, and I would say with a chart like the S&P, which is a chart I obviously look at multiple times every day, I always sort of ask two questions. Number one, what's the primary trend? Number two, what would tell me that trend is changing? I think that's an exercise we can always do on the chart of the S&P. And here's the way I would answer those questions right now. What is the primary trend in the S&P? The primary trend's bullish. And the reason why I would decide that is because we've been in a consolidation phase for a couple months. And then about a week ago, earlier this week, really, we broke above the upper boundary. So I would say this is a new accumulation phase, new swing high, and potential to go much further. After that breakout, we've had two sort of down closes on Tuesday and now Wednesday. However, once you have a clear level of resistance around 7,600, once we break above that resistance, which we did on Tuesday's session, that previous resistance now becomes support. So I would say for now, as long as we hold 7,600 on any pullback, conditions are pretty good. This is still a pretty good chart. We break below 7,600, I will start telling you about the dangerous situation, maybe re-entering that consolidation phase and maybe identifying some new levels of support. But for now, I think the chart is pretty good. The VIX continues to get low and stay low before you get too excited. And I know some of you are thinking, wow, the VIX is so low, that's probably bearish, because that would mean that the uptrend in price is probably exhausted. Unfortunately, the history really doesn't back that up. The VIX can actually get low and stay low for quite some time. So I've learned, don't use a low VIX as a sell indication. Look for a break higher in the VIX, particularly above 20, as a sign to get more defensive, right? Because that can often be the sign of a much broader decline. We're not seeing that yet. We're seeing volatility go very low. Please remember, the VIX can go, it doesn't go too low. It doesn't get down to the single digits, but it can get lower than 15. So there's no, automatic floor based on that. Thursday sentiment day on the show, so I just wanted to highlight the AAII survey came in a little more bullish than in previous weeks. To be honest with you, though, bears and bulls almost identical. We have 37% bullish, 38% bearish. That nets out to almost the same. So indecision is the way I would describe the AAII survey, probably more neutral than anything at this point. Rates continuing to go higher. And on a day like this, I think it's important to not just focus on one day to the next, focus on the larger trend. Coming off of the February low, where the 10-year treasury yield got back down to 4%. From there, we've been generally pushing higher. We've had some random pullbacks in the 10-year treasury yield as treasury bonds have rallied at times off of the March equity market low. However, the general trend remains higher. Higher highs and higher lows. That's an uptrend. That's what we're seeing on the chart of the 10-year yield. I think yields probably go higher from here. From one day to the next, we can obviously get a lot of noise, but in terms of the larger trend, definitely we're seeing weaker bonds, higher interest rates. Palantir, just want to note, similar to the S&P, right? Tuesday's session was a big breakout day. This was the earnings, day after earnings for Palantir, all bullish. But since then, we've pulled back a little bit today, kind of a doji candle as we test the 200-day moving average, kind of similar to the S&P. We've rallied up to key resistance, which is around $160, $165. That's where we found resistance back in March. And again, at the beginning of June, we're right back up to those levels. I think powering above that level with some follow through would be quite bullish. At this point, my question is, do we hold the 200-day? Overall, I would give the weight of the evidence more bullish than anything, but it's really more neutral until we can complete this break above the 200-day moving average. So have to be patient. Western Digital, as we discussed on the show, disappointing earnings after the close. It was down in the after hours. It opened lower today, ended up closing about 13% down. We did rally a bit through the course of the day, closed just above 450, which means we're basically retesting those swing lows. So I would say for now, those lows are still holding. Potentially, we are confirming that support level. We go any lower than these levels, though. You got the 200-day, which is a lot further down, around 340. That's another 100 points below current level. So I think we break below this through the course of this week. RSI breaks below 40. That would be a very bearish chart. For now, I'm holding on to kind of a neutral expectation as long as support still holds. Microsoft, I would say out of the Magnificent Seven, a number of those, as we reported on yesterday's show, charts like Amazon, Alphabet, showing those bearish candle reversals, like the bearish engulfing pattern. Microsoft almost stands alone in terms of showing some pretty good accumulation after that earnings. They reported earnings last week. We gapped higher. We had a couple up days, but now we're just continuing to see accumulation. So I would say out of all the Magnificent Seven at this point, Microsoft probably the most encouraging, showing great follow through above previous resistance, above Fibonacci levels, and overall suggests innocent until proven guilty. I think I've made it clear I'm not a huge SpaceX fan. This is the chart of SpaceX. I just wanted to point out, though, we have yet another bullish engulfing pattern twice now in the last couple weeks, actually three times if you consider this a bullish engulfing pattern. We've had these nice reversal patterns all around this same price level, around 108 to 110. So when we get down here, this appears to be where buyers come in, at least for now. That appears to be the new floor for SpaceX. I think there's still a lot more to prove, at least get above the 21-day EMA before we can describe this chart as anything but fairly negative. However, I think it's important to recognize some key support coming in there around 107 to 110. If that holds, maybe that's the level to be thinking about as a potential floor. Disney, I just wanted to highlight, gapped higher yesterday on yesterday's show. We asked whether we would get follow through. We got it. Today we closed above the 200-day. Let's see if we get further accumulation. I do want to have a position in Disney. I like the breakout above trendline resistance. I like the close above the 200-day. I like the RSI above 60. That's probably the most encouraging thing there. I mentioned running a scan for stocks making new 3-month highs. Two names that came out of there that I wanted to share with you. Clorox, which is really in one of the more defensive sectors, consumer staples. Forget about what sector it is, though. As I mentioned at the end of every show, it's always a good time to own good charts. So look at this stock closing above the 200-day, further appreciation on Wednesday, and making a new swing high on Thursday. I would say that's a good one. Actually, I had one more chart, and I don't know what I did with it, but we'll have to leave it there. I guess we'll check it out for the next show, folks. That was a quick sprint, quicker than normal. But thanks for being flexible. Thanks for hanging with me. I had a little bit of time to review the charts, to share them with you before I take my family to dinner here in San Diego. We're going to check out a taco spot. I see a number of really cool restaurants here. We're actually in Oceanside. So if any of you are from this area, a number of you said you were from San Diego, any recos about good places to check out while we're here, I'm all ears. Would love to hear it. But until tomorrow, I will say have a great night. We're planning an all mailbag episode tomorrow. Not exactly sure what time it will be. I will post the recording as soon as I can. In the meantime, have a joyful night. And remember, it's always a good time to own good charts. Take care, folks.